Well, I just made a silly trade. As you can see, my account is down 17.5% minus 15.44. This morning, I was up 102, 150, and then my account blew up. Why? Because I was stupid. What I did was I bought SPY puts as a day trade. I had one more day trade to go, and that's where I went wrong. I have been doing fairly well. This bump, as I mentioned before, was when I was doing some options, so it skyrocketed my account, and I was like, the options are just too sketchy, so I started trading stock. I had a nice little upward trend going here, was taking minimal losses, and was being very conservative. I thought I was smarter and I could really take a position on SPY and short it, and what ended up happening is it fell really, really bad. So what happened? I bought SPY options, SPY put, April 22nd. I bought this 282 put at 290. Guess how many contracts I bought? Show you. Bought 20. Bought 20 contracts. That's error number one. Actually, error number two. Error number two is because I didn't receive confirmation. I'll get into that in a second. Error number two is that my position size was way too big. Even if I had a good price confirmation, why do I go that big of a position on my account the size it is? I don't know. So I bought them at 290, right? So look at 5800. They fell because the SPY, I bought them right in here at 283.70. It fell down to 283.60. It went up about 150 bucks. I met my target and I didn't sell because I got greedy. I thought it was going to go down a bit more, and I should have just got it in and out. But because I feel limited with the PBT rule, I was like, you know what, I gotta make this trade a big one, and I paid for it really, really badly. So what had happened is it went up one nice long green bar, and another green bar, and I don't use this software to track my position. I use another software, but I'm just showing you on this just for simplicity at the moment. So it just jumped up. I was down about 700 bucks here. I should have kicked out there. I didn't. I was like, okay, it's got to go down. I see some long tails above body. Nice red bar. Okay, it's going to go down. And then really jumped up. And I'm like, oh my goodness. I was freaking out up here. And it came back down. Red bar, indecisive, green bar. And it was solid. It closed near its high. So I was really looking forward to a red bar to close out, cancel out this green bar. And it didn't. So I end up selling these SPY options. I average down on them to around the cost of 210. So 5,800, it's 4,200. Sold them off around there, taking about a $1,600 loss. So what can you learn from this? Don't trade options unless you know exactly what you're doing, unless your position size is correct, and you have price confirmation. I like to trade options of companies with high, not only high volatility or high liquidity. I'm sorry, but like with not a very big bid-ask spread. And SPY's been doing pretty good. I made like 100 bucks the other day on smaller trades, but I went way too big on this one. I should get smaller. I'm gonna pay for it, but yeah. So later on in the day, because I sold, I waited for a pullback. I saw this go up here, came back down, green, or went down here, red, it recovered, started the green, I sold right about here for 210. It jumped up, I was glad I got out, it came back down, I'm like, oh no, oh, I should have kept it. Look at where the options are sitting now. Options are sitting at 362. I would have been up over $1.5 grand. But the thing is with options is that, or not options, but the thing with the market is you can't time it right. You can't time it perfectly. So I should have taken what I had, taken my target, and just gotten out of the trade. That's the thing. You need to be in and out of the trades if you're day trading. And once you hit your target, don't be greedy. And I did not listen to my own advice. So I was up 150 bucks this morning, fell down, should have sold over there, came back up, should have sold over there, came back down, I sold it right around here, and then I had a couple other of my options that were working really well. I had an Apple credit spread that did really well. I opened at 60 cents, 290, 292 and a half credit spread, credit call spread for the end of this week, 424, and it gave me about a few percent return so far, so I canceled that out because I don't want to bet against Apple really at the moment. I'll bet against Disney because they have a lot more bigger stakes with this whole virus going on. So I bought these Disney ones at 20 cents. Show you my week. Bought them around up here, and over the weekend lost a lot of the theta, really burned up the premium, came up a bit, and then they're down to 5 cents. So I'm up 75% on that trade so far, which is really good. My position size is pretty small. So look at this. My position size on Disney, a call credit spread, is really small. My position size on SPY for that options day trade was huge. 20 contracts. I should never have done 20 contracts. So 3 things, guys. Wait for a price confirmation before you get into a trade. I didn't wait for a couple red or for it to break this resistance, or the support level. I didn't wait for that. Number 2, position size. And then number 3, have your targets in mind. And once you hit them, because even though it was a bad trade, I still hit my target, but I kept it thinking that we would end up down here, over here. So once you hit your target, just get out of the trade. I think the biggest thing for me, the biggest factor that was playing on my mind was the PDT rule. And because I can only make 3 trades a week, or day trades a week, on a rolling 5-day period, I felt that I needed to make it a big one. But I shouldn't have done that. I did fund my account with a bit more, so I shouldn't be under the PDT rule anymore, but I should just wait until I get that in my account, and then I can be in and out of trades as much as I want during the day, but I need to wait for price confirmation. That's the biggest thing I have learned, and also make sure you're patient, and just really be conservative with the market the way it is. This is a very interesting market with oil crashing like it is, and I think we'll see a little bit more downside this week. We closed at an interesting spot on SPY. If you look at the 1-week chart, we closed below the low, below the high of yesterday. So we might push down to the low of, not yesterday, sorry, Friday. We might push down to the low of Friday, possibly, if not a bit lower, which is very, very possible. But we will see, and don't take anything I say as advice, or as, don't trade on what I say, but just take it as one person to another, just suggestions, or just take it with a grain of salt, please. Anyways, I hope you guys learned something, or you found this video interesting. Please give a thumbs up, and leave a comment below if you have any questions, suggestions, or anything I can improve in. I appreciate it very much, and have a great day.